Hello, Warriors. Good Thankful Thursday to everybody. Welcome, viewers from investing.com. Have a great guest today. Dave Collin, professor at Cornell University, will be with us. So, Thankful Thursday. Dollar bulls are thankful that the 50-day held yesterday. Dollar bears are thankful that this is giving a rally opportunity to sell into. My view is I'm with Grega. Subscribers know. Grega was on live the other day that he feels that 4 is complete. We're on our way down for 5. And you also get shorter term looks from Grega as well, his recent 4-hour. So this is what you get at your fingertips every day as a subscriber to ForexAnalytix. And you don't just get Elliott Wave, you get Nicola Duke, harmonics, okay? You get candlesticks, Steve Volge and Blake Morrow. Steve showing this as a breakdown here. We got a little hold here. You get basic technical from Blake Morrow, and you get macro from Stelios Kontos. All time frames. Recommend everyone has a traffic light page. This is our traffic light page. You can't drive the streets without traffic signals. It'd be chaotic. You'd probably get into a crash. I recommend that you have the traffic light page before you drive in the FX lane. Everyone with me today? So here's a few things that I'm looking at. You could also try us out, test drive us for $1, 10-day trial, navigate it, and invest in your future performance with us. So getting back to the Dixie here. My view is that there's a selling opportunity, maybe a day or so from now, could be now. Look for some type of fib retracement off this break. My view is it will eventually crack the 50-day. Same scenario in the yen. Risk appetite back, yen's up a little bit. Again, held the 50-day. But when you look at it short term and you get out your microscope, the 1 hour, lots of confirmation down here, lots of downside momentum with an 18 reading and a 20 reading in the yen. This to me looking like kind of an ABC, a bear flag, a wedge. Still looking for one more shot down in the end to take out 112, head down to 111.50 to 110.50. Everyone with me on the analysis, you don't have to agree with me. I just want you to see it and consider it as part of your intelligence gathering. Okay, guys. So Euro Pound has come off pretty dramatically from the recent run that we've had up at 90.20. Still my contention that this is not it. Take a look at a daily here. So we've had a real nice run off longs from last week. Still think there's a bunch of buy stops above here. This is probably going to be a pullback. I'd be looking at 880 for a possible buy for one more surge to take out all the bears above here, above there. I believe if we start closing back under 88.40 or so, then this is going to be a failure. But my bias is this is just a hope high, just like the dollar is a hope low. And eventually shorts will capitulate over this level. We head up towards 91. And after all the shorts are out, it could be a nice campaign short if this is just another failing rally. Because eventually I do think we're going to 84. I just don't think that we're going to go to 84 from here. Everyone with me on that as well. So we have some risk on in S&Ps. Still don't think that there's going to be enough juice to make new highs here. I think we may have completed something. And this could be setting up a rally. We have one drive here, two drives here, another one to follow. Hats off to Blake yesterday talking about the Aussie Kiwi yesterday. Did rally dramatically as he had a vibe that could be. And then let's get to really what it's all about in here, and that's the euro and cable. And after this failed head and shoulders breakout, which ForexAnalytix and FACE attendees were aware of, that we didn't believe in this breakdown. Steve said it wasn't impulsive, so everyone's playing the head and shoulders, they're gone. So I would look for this as a buying opportunity. I don't think that they're going to make it that convenient to come back to the neckline. So I'd look for maybe 50% back, maybe another day or so of downside action. This is just my view, and I believe that some of the team is also with me, that I still believe that we're going to make new highs in the euro before we have the big break in the dollar. So Dixie still could go to 90 and euro could still take out 121. And I believe that's all I really have to share this morning. I'm looking forward to the interview that I have with Dave, and you may want to consider taking a look, see all the green all the arrows are up. You get all the support resistance areas here. Okay. And you have a bull bear line. 121 is a bull bear line. If you're bearish, I think that we'll take out stops above that. Okay, we also offer patterns in play. You can see we have a few things going on here. Greg is bearish. S&P's ending diagonal is one of the most bearish formations in Elliott wave. Blake has been riding again down from the highs over 114.50, still short. Greg has been short Aussie for hundreds of pips. And looks like Nick is also bullish and has the same areas I just talked about. Okay, entry area. Oh no, she's short. Okay, so she's looking for 86.70. So she's bearish here. I do not like to be on the other side of Nick. I'm not buying it. And now it gives me pause because Nick's work is excellent. And I've seen her really call a lot of major turns in euro pound. So I'm going to have to take another look at it. I thought we'd have 91 in it. I guess I'll wait till 90.30 to be taken out. But looks like it's a bearish harmonic pattern here by Nick. Let's look at this. Okay, so she's saying that we reached a target here. And we're still pulling back on a longer term basis. So the pound, in fact, I'm glad you brought it up, because all the work, even though we're up here, I don't think this is bullish. It's not impulsive. It's still a range. My bias is that we'd still take this out and head lower in the pound, which makes a guppy with my view in yen that there's another flush to the downside, and the guppy is up sharply today. To me, looks like a potential scale in short. Let's get a little shorter term with it. 48.50. I think you could risk a 150 close. I think we're going to take out this level at 48. Head down towards new lows, maybe even as deep as 46. So I'm not impressed, even though both the pound and the guppy have held and have recovered. This market still looks vulnerable to me. But if Nick is right, then the euro yen actually may be the better short. We failed up here at 78.6. This looks like so far a failing rally, but I would wait here too. I have a hard time with it because I am constructive on the euro. Perhaps we get A, B, and then a C back up here. So I'm leaning more towards shorts in the guppy and Aussie yen for risk off after this rally peters out. And the S&Ps still looks very weak to me. We have a lot of confirmed lows here. Aussie yen still looks vulnerable. I don't think this is a bottom. I think we'll get one more washout down towards 84.5 in Aussie. I don't think we need a Nikkei meltdown. I'm not sure if we need one, although I still believe the Nikkei is vulnerable. I'm going to let Steve cover that. Steve was in the other trading room that we have. So I just want to make people aware that although we have this free webinar every day, that there's an hour of analysis and then a half an hour interview. And then we have the other trading room for subscribers that have been with us for 6 months that carries on for almost 24/5, 24/6. You're going to find people in there during all different time zones, collaborating, supporting each other, being a community. So thank you for that question, Abdul. And with that being said, I'm going to hand it off to Mr. Confirmation, one of the most disciplined traders that I've met in my career, and it's over a 3-decade career, Steve Volge. I call him Nostra Volge, except Nostra would be predicted. Steve has the discipline to wait for price action, to confirm his biases, and that's why his hit rate is so good. So Steve, when I woke up real early this morning, I was a little concerned. I'm glad you guys are okay, that there was some pretty bad flooding in Athens, and I'm glad you're not on that side of town. So
yeah, we're not on that side of town. Good morning, by the way.
Good morning, buddy. So be interested in what you're thinking here with the dollar holding temporarily. The bulls are going to say it's still okay, even though we negated the head and shoulders bottom. One of the edges that I have is when I'm not clear about things, after you and Blake and Greg and the team come in, it crystallizes things for me. So where's your head at going into the end of the week?
You want me to take the screen?
Yeah, I do. Okay. I like your charts better than mine.
Your charts are fine as well. Okay, now having to do with the DXY, since you mentioned it first, and for a very good reason, obviously, because the FX market is in a big extent dollar denominated, and the vast majority of the main currency pairs that people trade do include the dollar. So I can't make your job much easier because we have the following thing happening here with the dollar. First of all, the dollar has invalidated the inverted head and shoulders formation. There's no question about that. It has also broken below this intermittent red trend line I have drawn here, which is like an ascending trend line.
You mean on the RSI? On the RSI? Oh no, the dotted line. Okay, I got it.
This one, right.
Yeah. Yeah.
And obviously these are not bullish developments; these are bearish developments. On the other hand, to confirm a resumption lower, which Grega is viewing from an Elliott wave perspective, and I 100% respect it. And I think that the chances that he is right in his prediction are quite high. But on the other hand, from a basic technical analysis perspective, I have to note down here that unless I also see a lower low in the series of higher lows that we had since the correction began, I cannot 100% be certain that this is the resumption of the downtrend. So for me, a break below 93 is going to be that confirmation. Okay, until then, I remain neutral. Obviously, I'm fully aware of the possibility of penetrating lower and even accelerating lower. But as I said yesterday, yes, I still see the dollar being mixed in the sense that, as you very well mentioned yourself, let's have a look at the Aussie. There is the Aussie. It's still pushing lower. We actually tagged the next support line I had in mind, and ideally I would want to see 0.75 being tested. Let's have a look at the Kiwi. The Kiwi seems to be resuming the downside after breaking this bear flag. So what I'm trying to say is that there are still pairs that the dollar is quite strong against. Today, to be honest, let me go to the Euro USD. Today, to be honest, we're even seeing some little weakness of the euro against the dollar, which means the dollar is a little bit stronger. And yesterday it paired back, you know, it's daily losses. I mean, the dollar against the euro, and actually, you know, the Euro USD closed negative. I do believe, though, that probably it's going to resume higher. As I said, I'm looking for an opportunity to probably buy the Euro USD. I already have, actually, as I've said in the chat room, I already have orders to buy the Euro USD lower. So what I'm trying to say here is that we're seeing some mixed performance, and as long as this mixed performance is resuming, and you know the dollar is not breaking below the 93 level, you know, I'm not willing to jump the gun all over the board and start selling dollars, you know, as a general thesis. So as I was cautious while we were rebounding, and it's not that I went long the dollar against everything that, you know, that was out there, I selectively started going long the dollar, you know, from quite the lows actually against some pairs. You know, equivalently, I'm not willing to be selling the dollar, you know, all over the board at the moment. I'm going to be still taking both shorts and longs against the dollar. You know, depends on the currency pair. Now, of course, if we see some acceleration lower in the dollar and it starts, you know, breaking levels almost across the board, then it's going to be a different kind of discussion. But we're not there yet. Okay. So that's my point. Now, I know that a lot of people, especially now lately that we've had these moves lower, have been monitoring at indices more than they usually do. So I want to begin with talking about the DAX, because the DAX was the first index that actually turned lower. Then it was followed by the Nikkei, and then some limited downside was, you know, was also viewed in the US stocks. I have to say that I had made very clear that for DAX, this area here, it's a 100 handle area, is, you know, an area of very critical to the short-term trend, because, you know, even if we break below that, still the longer-term trend is going to be to the upside. But in the short term, you know, that was a very critical area. And actually, yesterday we went to the bottom of it, we rebounded, we closed on top of it, and today we're rebounding from that. So what I'm trying to say here is that we already have a very nice indication that, you know, some type of a rebound is resuming from here. Now, is that rebound going to be a resumption of the prior trend and the push to new highs? Personally, I'm a little bit hesitant to say that, because, you know, I would expect, I mean, if you break down in lower time frames, the move lower, it's quite impulsive. So I have to tell you that although we're rebounding from here, which is like a perfect level to find the rebound from, I'm still inclined to believe that this move lower should have at least one more leg down. So I'm not quitting my bearish thesis. I just believe that this is a short-term bounce of some kind. But I remain, at the same time, I remain bullish on stocks on the medium to long term. So I have no reason to believe that the move lower is done for now. But on the other hand, I also have no reason to believe that after we get another sell-off, this is not just another corrective move lower. And that doesn't apply only to DAX, okay? So in the very, very short term, you know, I'm looking for a bounce. I would be looking for another move lower, but I have no reason to believe that this is a trend reversal, right? So I wouldn't be pushing it too much, having to do with the bearish thesis. But I still think there are profits to be made being short, perhaps from higher levels. That is also why yesterday I reduced, while we were still quite negative, I also said it to the chat room, my Nikkei short to 1/3 of my initial position actually. So now I've already booked 2/3 of my initial position with an average profit of 3.9%, because I booked it, in two separate parts, and I'm holding the other third, and I will be actually probably be looking to add into it a little bit higher, probably 22,600. If we get there, I'm going to be adding a third back. Also here looking for the potential of another move lower. Okay, so for at least an ABC, let's say, lower, because this was also an impulsive move lower. So I don't think we're headed to new highs straight from here. I think we'll see a little bit more weakness first. Okay, or even a little bit more than a little bit more, but definitely I'm expecting one more leg lower. Okay, now the conversation is a little bit different when we go to US stocks, because we
that
never
was a great call on that key reversal up there in the Nikkei, Steve. Kudos.
Yeah, thank you. It's one of the few times that the market tells you something very clearly, you know what I mean? And in this case, you just have to, I know that many times people get paralyzed because they're seeing a very strong market, and, having seen that move higher, even when you see like a very strong reversal, you hesitate. But, some type of moves like the one we had that night, that we went like 2.5% higher and then started reversing lower very hard, it's these kind of moves that, I've seen plenty of times in the past, and they're quite clear, you know what I mean? And in this case, you just have to ignore your, your fear or your bias, and just, do what the chart tells you you need to do. And I was lucky. I complain because my toddler is keeping us up at night very often, but that night he actually made it back, because if I wasn't awake, because it was in the middle of the night here in Europe, if I wasn't awake, I would have lost a very good entry point.
All right. Well, don't forget to give him his 2 and 20.
Yeah. Okay.
All right. All right.
Yeah, I'm not sure I'm going to do that actually, because
for his college fund, Steve. For his college.
Yeah, that's a different story. Yeah, for sure, for sure. Although something, I'm not sure we're actually going to be taking our children to college because of them or because of us. You know what I mean? It's half doing a favor to them and half doing a favor to you, to yourself as a parent. So having to do with US stocks, listen, we haven't seen as strong of move lower in US stocks as we've seen in the DAX or in the Nikkei. My intuition still tells me that we should see some more weakness spilling over, but obviously so far being short US stocks has been the worst bet in comparison to other markets, right? So I would be more nimble. That's why I also, took the opportunity when we moved lower to reduce quite a lot my short positions, at very close to their entry points. And although I do believe that we might see more weakness, and that would also be healthy. On the other hand, I have to reiterate what I've said plenty of times, that as long as for the SPX now 2,545 level holds on a daily closing basis, there is absolutely nothing really to talk about, and more or less the same applies for DAX, having to do with 23,250. Yesterday we came very close to that, but today, as it seems, we're going to be opening higher once again. So no real technical damage done yet to US stocks. Okay, so I would be...
Yeah, maybe, you guys were laughing at me with that old Wall Street adage, Thanksgiving, the Bears feast on Thanksgiving, and that's next Thursday. So maybe we pop for a day or two down into Thanksgiving and then blow off one more time into Christmas, New Year's.
Sure.
What do you think?
Might be.
Yeah.
Might be. I mean, this is an uptrend, right? There is nobody that can doubt that so far. So, you know, having leaning long or having a long bias in such a strong uptrend, statistically, is the right thesis. There's no question about it, right? So that's what I had to say about stocks. And now let's have a let's have a look at some of the. Oh, by the way, Rio, you asked for that yesterday, and you know, then Grega came in, and you know that was not. I didn't know he's going to come in, so I never answered your question. So yes, today I'm going to make sure that I do check at the Aussie Swiss, the CAD Swiss, and the Kiwi Swiss. This is a personal promise. Good morning to everybody that says good morning. Okay, I said yesterday.
Ask and you shall receive, Rio.
Yes, and sorry for not covering that yesterday, but I'm going to do that today. Okay, having to do with the USD yen, let me first go through a couple of popular ones. Having to do with the USD yen, first of all, you know, as you very well know, Dale, I usually plan my trades ahead, but yesterday I took a short here, which was a spontaneous short. I wrote it to the chat room when you know we had a very big rebound. We rebounded yesterday up to, if I remember right, like 113.20 almost, before moving lower. So at 113.075, I took a short-term short. So it was a leveraged one. I wrote to the chat room. It's one of the few times I do that, but I really thought, you know, that we should see some more weakness. I had a 50 pips stop loss. I took profits of half of my position at 12 pips, and then overnight, actually, I didn't even see it. The rest of my position got closed for a profit of 50 pips, which was, you know, a nice surprise because I rarely take short-term trades.
Yeah, nice impulsive trade.
Yeah, it's, you know, it's one of the things that, you know, they really scream at you. I mean, the retracement yesterday was too much after pulling back, you know, from the lows. But I have to say that, you know, there are several interpretations of what the USD yen is doing at the moment. But my main thesis scenario is still that we should see some lower prices first. Although technically speaking, it could have found the low where it did at the 50 DMA, after in essence putting like something like a three-wave down. I don't think that's the end of it. So I have no position at the moment here, but I would expect that the USD yen is going to resume underperforming, if not like imminently, like you know, soon enough again. So nothing has changed here. We've still broken below this ascending wedge. It's still underperforming other correlated assets. So I really believe that being long is still a dangerous thesis here. Okay, now having to do with the cable that you mentioned, I also wrote yesterday that I reduced my exposure to cable quite a lot because it hasn't been moving much. The dollar, as you already said yourself, has started underperforming. So I've reduced my position here as well. But what remains a fact is that we are in a triangle. We're in the middle of a triangle. So at the moment, there's not much to do here. You know, logic says that if this is a triangle, we should be seeing a break to the downside. But, you know, the more this choppy price action gets prolonged, maybe this ends up manifesting to something else. Okay, so we've already spent like, actually from the first days of October, from what I see. So we're almost 1.5 months in this range. And, you know, I don't think somebody should be really investing too much time in this until we finally see some type of a breakout from here. Okay, let's have a look at the euro yen. Okay, once again, nothing to do here. I left this head and shoulders. We can delete it now, but there was a potential for a head and shoulders formation. But regardless, one fact remains for sure. I don't know if this thing is going to break to the downside. I don't know if it's going to break to the upside. I honestly don't care. The reason I don't care is I have absolutely no intention of trading it as long as it remains between this support range and this resistance range. Okay, if it breaks down, then we can be talking about a break from a range and an extension towards this area, the 128.70. But until we see that happening, there is also the possibility of testing once again the highs near 134.50 and breaking to the upside. If that happens, yeah, it's a coin toss. If that happens, you should also expect that the break should probably extend at least towards the 161.8 of the last correction we had, or you can also measure this range and say that it's going to extend, as much as this range is, which means to the 200% extension, so higher than that. Okay, so what I'm trying to say is that you have two options here. Either when we retest the lows or the highs and you believe that it's going to resume being in a range, short the high or going long in the lows, you have a very well-defined risk-reward ratio. This is exactly the same thing I had said when we were testing it down here. I said that, listen, I think that it's quite likely we're going to be breaking to the downside, but regardless, for those of you that want to take a short-term trade, the reward to risk ratio favors being long, because you know exactly when you're going to be wrong, when you see a daily close below this area. So actually, for example, if that was your style, like trading the range, you made some money. Personally, I'd rather see a breakout and handle with it later. But it's it's a matter of preference. It's doesn't have to do with being right or wrong. You can be right or wrong doing any of those. Same applies to the pound yen. In what sense? The pound yen is likely in a consolidation, might be a triangle. There it is. Okay, might be a triangle. For sure, I cannot turn bearish, because if we zoom out, you're going to see that we broke out, from another triangle. We came back, we retested this area, and we held. So as long as that's the case, I cannot be bearish. But on the other hand, I cannot be outright bullish at the moment, in the sense that it's obvious that we are in some form of consolidation. As I said, the triangle is quite a possibility. Okay. In this case,
I want to interrupt you. I think you're making great points here. And from your analysis, a lot of these instruments are either or right now. And a lot of people have to know that it's okay to do nothing. And
no, it's absolutely okay.
Right. When things are indecisive, forget FOMO. If you miss it, you miss it. But it's okay to be in cash. That's a position too. And
for example, to mention what you said, I need to remind you, somebody had asked about the pound yen, and I was expecting a rebound from here. That happened. Then they asked me again, and we talked about it when we were somewhere here, where I'm showing here. Okay, and I said that, listen, it rebounded from exactly where I expected it to rebound, but for some reason I cannot turn bullish, because the price action to the upside does not look impulsive to me. I could have proven to be wrong. I mean, I could have lost a great opportunity of going long, because it might have ended up accelerating higher. But I wanted to be cautious. The price action was not telling me that it's accelerating higher, and that actually got proved, because we turned down again and we are in a range. What I'm trying to say is that sometimes you might have like strict criteria, and because you have strict criteria, the stricter criteria you have to get involved with a trade, it's mathematically certain that the more trades you're going to lose, because they never met your criteria. But on the other hand, usually you have a higher hit ratio. So once again, I have to say, it's a matter of preference. What kind of trading you want to do, how often you want to be trading, etc.
I would say one thing about that guppy, Steve. If we go back down to the breakout again, Mr. Market's usually not going to accommodate it. Maybe we get a bounce from there, but that was a major breakout, and it actually, on the first pullback, took it out by a little bit, and until yesterday we were almost there again. So I get a little jaded and skeptical when a market says, okay, Dale, you missed the breakout, you missed the retest. I'm going to give you another opportunity, and you've had a month to think about it. You know what I mean?
I agree with you. I agree with you. Although, you know, if this ends up being a triangle and we see this type of price action from here, then I would have to tell you that the more we approach the triangle's resistance, being a triangle, the more likely it's going to be that we will end up at the next test having a breakout to the upside. Okay. So, but the fact remains that, you know, this at the moment is binary. We break below this area here, the 147.50, call it roughly, bad news, very bad news if you're bullish. On the other hand, we break above this triangle, more likely than not, we're headed to new highs before we decide what's going to happen after that. So then I'm going to be looking for targets, for higher targets, perhaps towards, we have a confluence there, a horizontal resistance zone and the 161.8 of this move. So I would be inclined to be looking for new highs, probably towards there before anything else. So I think that the pound yen at the moment is binary, as you said, but I do think that a breakdown from here or a breakup from there should give a strong enough move for people to be able to profit from that.
Okay, so you know, when Steve gives critical areas like this, I don't know about you guys, and there's a lot of you in here today, but by 1 o'clock today, I'll have forgotten them. So what you may want to do, is write them down and have a column, some type of Excel sheet, and you know, that way you know when you're approaching those areas that something might be actionable. So just an idea. Writing things down is a good idea. You forget, see, you can't forget because it's your chart. You have all your lines there.
Yeah, that's true. Blake, I hear you're here, and please do take over. I just need a favor from you, because I didn't expect yesterday Gregor to show up. If you can have a look at some Swiss pairs for our friend Rio, because he asked yesterday as well, and we never go to his question.
Yeah, I will. I actually had just my office just chimed in from the on my other computer, so I was just chatting with them for a little bit. For those of you that don't know, I trade for a closed-end fund, so I'm online with them all day long. So every once in a while, when I have to go dark because I'm on here, it's just because they're talking to me and they're asking me questions, because I deal predominantly, I'm more or less their currency specialist, where they deal predominantly in equities and indexes, and then you know, if they're interested in something currency related, they usually start yammering at me. So and then I give them, you know, ideas of things that I'm doing. Speaking of which, I was just telling them just a moment ago, and then I'll answer some questions. This US dollar Mexican peso, I shorted it yesterday at the close. Now, if you don't, it wasn't anything really like I could really hang my hat on, other than it was a false breakout. We posted this false breakout yesterday. There's a bunch of you know, NAFTA negotiation comments and coming from Mexico, and the peso actually strengthened following. And I'm sitting in some US dollar Mexican pesos short from yesterday at the close, and we've been coming down most of the day. I shorted it up here at 23, and I'm really looking for, before I get too aggressive, I'm looking for a move below like 1905, and you know, we get below there, and then I might be a little bit more aggressive. I am still short dollar yen. It has bounced a little bit with the Nikkei and with risk appetite, but also at the same time, you know, if here, you guys that are in the chat room, you guys can say hello. These are the guys and gals in our chat room. You guys are all on Jumbotron. I was buying the euro dollar earlier this morning at 117.60, and I already sold it like these guys know here in the chat room, I sold it just a little while ago. Said took the euro dollar off, closed my Swedish krona. I was long US dollar or short US dollar Swedish krona, and I said I have a lot of US dollar shorts, a little too heavy, more portfolio management. That's basically, you know, what I was doing this morning. And then you can say hello everyone.
So your peso trade, Blake, was a great soccer game trade.
Jumbotron. No, but you know, actually, believe it or not, I was that was all it was the Aussie. The Aussie was happening.
Oh, okay.
I actually had to drive. I pulled over into a gas station for the Aussie employment data last night. So and it worked out, you know, all right, because I was short some pound Aussie and you know, we had.
Don't pull over. Don't drive and trade at the same time. Because you know we do have a phone app. Everyone here, so you know Blake, you know, takes it wherever he goes.
I do, although I couldn't update the Australian data overnight because I don't have the admin on my phone. So that's. So the updates you get throughout the course of the session, like these right here, you know, I might do, or other of our teammates, but you can see the euro dollar, we were looking for a bounce, you know, that was since yesterday, but that was an update from just this morning. Here, I'm gonna get rid of the chat room here, but anyway, the euro dollar, you know, I was trying to pick up this morning. I actually really wanted to buy. I have more aggressive orders to buy down here at the 38% retracement. So, and the reason why I want to buy, you know, more here is because I think this is going to be not only a 38% retracement, but also a retest of this trend line. So I kind of got in. I got in a small position. I got out. I was in the US dollar Swedish krona. I got in and got out, and that's because the euro dollar hasn't completely reached where I wanted. But you can see the Swedish krona came up to the 618. That's a big daily resistance. Even though we haven't completed this inverted head and shoulder pattern, the problem with the US dollar Swedish krona is just that, you know, inflation data out of Sweden came in extremely light, and so that to me is one of the reasons why the US dollar Swedish krona hasn't turned like, you know, the euro turned decisively higher this week. You know, this US dollar Swedish krona hasn't turned lower because of that inflation data. But the good news is traders and investors, they tend to have a really severe case of ADD, and inflation data was yesterday's data, not yesterday's data, but like 2 days ago. But what I'm trying to point out is people forget, and traders, like, they dismiss it, and then, you know, a couple of days later, you know, people start looking at the US dollar Swedish krona and they start going, oh, well, what the hell is it doing way up here with the dollar strengthening or weakening? I should be shorting the US dollar Swedish krona. So I'm just kind of playing off of that, the overflow from what we're seeing in the US dollar. I had a couple questions, I guess, and I missed them, but there was a couple questions about the, I got to go back and look here.
Swiss crosses, buddy.
Swiss crosses?
Yeah.
Rio asked about the Aussie Swiss, Canadian Swiss, and New Zealand Swiss. Well, all right, let's take a look.
You trade them?
No, not all the time. I have in the past, and it's not something that I like. I just pulled you out to a weekly chart, and you can see exactly the reason why I haven't been trading them recently. We just haven't seen any broad-based moves. You know, they are under a little bit of pressure right now, but this isn't like, this is the Aussie Swiss. I look at that, and this is just from a weekly chart. I would be hard pressed to do much while we're doing this. While we're in here in this wedge, like in the apex of this wedge, there's not much direction here. I mean, yeah, you might get a little bit of downside pressure, you know, and this has more to do with risk off. You know, whenever the markets come under pressure, stocks and equities, then you tend to see Swiss franc strength as a result. And you know, without much stock market weakness, I don't know if I'd really be too excited about shorting the Aussie Swiss.
No.
If you know, stocks really come under pressure, I think this is probably one of those that you want to look at being short. That would be something that you want to do. I have a hard time, and everybody that knows me and has known me for years, I have a very hard time buying Swiss francs because of the Swiss National Bank's position in the market and how negative their rates are. It's a costly endeavor, especially when you're taking big positions. If you're taking, you know, a $5 million position short on the Aussie Swiss, it's going to cost me an arm and a leg to do that for an extended period of time. You know, if you're trading, you know, 10,000 or 50,000 or 100,000 worth of currency, it's not too big of a deal, but it still gets costly. So you have to be, if you're trading on the short side of these, you have to be very precise in your entries versus anything else. Let's take a look at
Edwards and McGee would call that an ascending triangle, which is a reversal formation.
It is, and one of the things that I'm more apt to do is I'm more apt to actually sell Swiss francs and buy other currencies. I'd rather play this because this is a great carry. If we ever get an upside breakout, and I'm not saying we will. I mean, look, I look at equities just like you do, and I go, man, they are overbought, and, you know, way up here, and I would think that we're going to get some sort of correction soon. So that's the only thing that makes me hesitant about this situation, about trying to play it on the long side, is I do think that equities are going to, you know, stage some sort of pullback. And if they do, you know, maybe the better trade is to buy this thing when it drops here. You know what I mean? That's probably the better trade, is just being patient, exercising some patience, and getting the Aussie Swiss at a better price. Let me see the New Zealand Swiss. It's cracking a little bit. Again, these are weekly charts. So here's your daily chart. Yeah, I'm not too terribly excited about that either. Canadian Swiss, I think, is the other one. And yeah, there's just not much to do. I mean, these are daily charts that I'm showing you. I mean, I can't say I'm particularly excited about doing anything here, really. Okay, Rio, good luck with those. Abdul asks, is Nikkei have the highest correlation with the dollar yen, pound yen, or the euro yen? Well, that's a great question, and I'm glad you asked, Abdul. You know, the Nikkei has the strongest correlation with I believe the dollar yen at this point, but you have to. It depends. The base currency that you're dealing with, I think you're going to have to look around and say, what is the weaker or the stronger the currency that day, based on, you know, maybe some economic data that's been released. There is a blog coming out today. So I'm going to say this slowly, Abdul and everybody else. There is a blog coming out today from the ForexAnalytix team regarding the yen pairs. I wrote a lot last night. I know all of our European contributors have written this morning or are writing and have been contributing. So it's going to be a nice team collaboration effort. So make sure that you listen in there, or you read that, because I think it's going to give you a little bit more insight on how we feel about the yen pairs. Speaking of the dollar yen's about ready to test 113. If you guys missed this this morning here, you can see we had a Gartley pattern. If you use ForexAnalytix, there's the US dollar, Japanese yen, Gartley pattern. You guys would have known about that a little while ago, you know, before we started breaking down. So the US dollar, Japanese yen is actually coming down a little bit as a result. We've cracked this upsloping trend line. There's another thing that you should be looking at, especially if you're trading these yen pairs, is look at yield. The 10-year actually backed up to previous support around the 236 level and is coming down. And so as yields come down, that typically will weigh on the yen pairs. So you got the dollar yen that's under pressure as a result, with bond yields coming down. Or if you're looking at bonds in general, here, let me pull up the 10-year. Here's the 10-year getting a nice bounce. And I actually believe, and this is one of the reasons why I'm playing the longer term US dollar Japanese yen to the short side, is that I believe that the, hold on really quick. Hold on. I might take my dollar Mexican peso off. And the reason why I might take this off right here, I'll just reestablish it later. The reason why is because the equity markets look a little wobbly here. And if the equity markets sell off, one of the things that moves typically is when equities come down, emerging market currencies get weaker. So I'm a little worried that equities might retrace a little bit here, and if they do, it might cause a bounce. So I'm going to go ahead and pull my US dollar Mexican peso off. So I just did. I just took that off the table. So let me cancel that order. Stand by. I'm just adjusting a few things here. And you know, the dollar Mexican peso may come down a little further. I'm more interested in shorting. You can see I have an alert set up here at the 1910 level. You know, we break through that, and then I don't mind reestablishing a position either. So I have no problems about getting back into a trade, especially if I just took profits. If I think that it's got further to go, and I think we really need to start making lower lows here in order for that to happen. Martin says, now this was to Steve, but he says, hey Steve, I know your midterm bullish stocks, S&P you mentioned days before 2800, is that correct, before a bigger move lower? I don't know what Steve's take on equities are. I will tell you this much. I think the equity markets are in this channel. So, I wouldn't be surprised if we correct first before heading higher. So in other words, I wouldn't be surprised if we do this, maybe a correction of 2,500 before we push up again. If you think about like into like Thanksgiving, because the bears feast when, Dale?
I was just putting the turkey in the oven.
The Dales feast on Thanksgiving. The bears.
I was just basting the turkey, buddy. The bears feast on Thanksgiving. So
okay. So anyway, thank you. Craig says, I'm totally Forex pairs, but a bit curious on how Steve views silver on the daily if possible. And you know what? Steve and I have the exact same views on silver. So let me just cover that really quick. Because we both do basic analysis on silver and gold and all the pairs. We share the responsibility between candlestick and basic technical analysis. But silver is really in this very, very, very tight triangle, and we're poised for a breakout. And I'll tell you, precious metals have been straight up crap. They really have been just crap. It's been so hard trading gold and silver, and I don't trade them often, and I haven't been trading them, but I've watched like the failed moves in gold. Like just yesterday we were rallying, and then all of a sudden the bottom fell out of it, like right here. And then you look at silver, same thing with silver, and it's really choppy while you're in the apex of this triangle. But look, if the triangle breaks, we break above 1720, or we break below 1680 or 80 or so, then you're going to have a big breakout on your hands. And I think you got to be very patient here. Patience will pay, I think, in this situation. So, and I myself, I'm looking at it because if silver breaks higher and gold breaks higher, that is going to reaffirm my bullishness for the yen. So in other words, if gold and silver rally, then I'm going to feel really good about being short the dollar yen, or long yen, in other words. Luca asked about Elliott waves. I don't know if Greg is here. Is Greg here? No, he's not here today. Okay. Let's see. Madras, excuse me if I mutilated your name, it says Euro Yen seems best for short trade yesterday. Nice bear candle. Yeah, the Euro Yen, you know, I've been trying to trade this thing on the short side, and I've had a very difficult time. I got stopped out a couple of times. I've traded it short from up here, made money. I tried shorting it while we were near support, thinking that we're going to break down. I got stopped out. I tried trading it again on the short side. I got stopped out, and I'm like, you know, for me, I really want to be aggressively short if we break through this support here at basically 131.50, and we get a daily close below. I'm trying to grab the line here, and there we go, 131.50, and we close below that. That's where I get aggressively short the Euro Yen. Now, talking about yesterday's candle, yesterday's candle was a Marubozu opening black candle, so it is bearish, but it's also an inside day, so I'm not super excited about it. And you notice that if you have the Euro Yen and you look at basic technical and basic candlestick analysis, okay, you know, the Euro Yen registered a Marubozu opening black candle, but also an inside day. And when it's an inside day, that's the cause, in my opinion, one of the root causes that we're getting this pause in the Euro Yen, and it's being torn. You know, we had the Euro dollar that was weaker this morning. We had the dollar yen that was stronger. Then you have the dollar yen that's weakened, and then the Euro dollar that's, you know, bounced. It's giving us a lot of mixed signals at the moment. And that's one of the conflicts the Euro Yen's seeing, and I really think that to get a real clear picture of the Euro Yen, we need to see a breakout of this range that you see here, you know, 134.50, 131.50, and I'll tell you, when we break out of this 300 pip range, whatever happens, you know, and I hope it breaks lower. I'm playing the yen, so I hope it obviously breaks lower, but even if it breaks higher, I think that once we break out of this range, it's going to be a really massive move. It's going to be, because if you think about it, we've had, you know, this is 2 months of a very tight consolidation of a currency that will move pretty aggressively. So when you get bottled up like this for a couple of months, I'm excited for whatever breakout comes. Hopefully it's downside. That would pay me well based on my yen position at the moment, but that doesn't mean that I won't play it to the upside if it does break to the upside. Alina says, what's your criteria to reestablish the trade? You know, Alina, it depends on a lot of things. I mean, you know, I think most people look at the charts and they go, okay, well, I'm gonna reestablish my trade if it goes here and it breaks through here. You know, looking at the charts is only one part, and frankly, not the biggest part of the full equation. You know, so, you know, if I want to short the US dollar Mexican peso, I may be looking at, you know, what is the South African rand doing, and what is the other emerging market currencies, what they might be doing, what's crude oil doing, you know, what's the reasoning for the dollar move? Is it because yields are dropping aggressively? You know, are stocks moving? How's that influencing the market? So I have several different criteria, not only charts, that I focus on. And that's why even when we, and this is one of the reasons why ForexAnalytix is extremely valuable for those of you that use it, because those of us that do analysis, we don't only just take into account. I'll point out the euro dollar basic analysis here, and I'll write that, but I'll also comment on, and I'll factor in my own analysis why it may be moving up or down, and it may have other conditions that are attached to that. So it's not necessarily a black and white, oh, the chart is doing this, so I'm going to make a trade. That's only, you know, driving with just driving with one eye shut, if you will. And that's why I think you have to take in a lot of different things. So the US dollar Mexican peso, I don't think it's an easy answer. There's a lot of things that have to fall into place. And then I have to make sure that there's a decent risk reward setup to be in that trade. Like I have to look at it and go, okay, well, if I'm going to short it, where am I wrong? If it breaks through support, I might short it, but I can't let it get above a certain level. And I have to make sure that risk reward matches up with what I'm trying to do. I hope that helps out. And she says that makes sense. Thank you. And Madra says, okay, good explanation. You're welcome. And I know you have an interview. Dave asked really quick about the Aussie New Zealand. I'm just going to tell you this. I have been staying clear of the Aussie New Zealand. I think you can look at it this way. As long as we stay above this 110.20, I would be really cautious about being on the short side, as long as we hold above 110.20. Okay. And Dale,
yes,
I know you have your
and good call on the Aussie Kiwi yesterday. You anticipated a top.
Yeah, thanks. It was one of those. I saw it give a false breakdown, but I don't even, in all honesty, I don't even know if I traded it yesterday. I think I was looking at it, but it's given us a lot of false signals. So I'm not.
We've had so many false breakouts and failures lately, Blake. Do you find is it unusual? In your opinion, or it's just same as it ever was?
I think it's same as it ever was. But when you're looking at a currency like the Aussie New Zealand, I don't think it's so clear on why it's going up or down, because I think it's being torn between, generally speaking, weaker Australian data, but also a weaker New Zealand hand of the government, if you will. Yeah, it's more political. So I don't. When you've got a good theme to trade off of, and it's pretty clear cut, like, the Kiwi's going down because of the political turmoil that's happening in New Zealand, then it's it's pretty clear. And but once you throw in Australian political politics and then weakening Australian data, and then then it comes in a little mixed, you're like, okay, well, it's the waters get a little muddy. And so that's why I think the clearer pictures are, you look at the dollar now, and I think that's where like my attention has been focused, is more the dollar and the yen. So
thank you, buddy.
You're welcome. Hey, thank you very much. Have a great interview today, and thanks for having me on.
Great analysis by Blake and Steve, and I'm going to show my screen. And Dave, thank you so much for coming here today. I'm going to make you a panelist because I don't believe you brought any charts or anything, but looking forward to hearing your voice. We have a lot to catch up on, Dave. Can you hear me? Let me unmute this. So you'll see the voice coming up. Attendee is self-muted. Audio pin sent. Any luck, Dave? Because I see you logged in twice, so that's a little confusion for me. Let me try your other one. How about that? Well, Steve, maybe you could help me and Dave out here. Help the professor. So Dave, you have to turn your audio on. Now I just have you as one. Attendee can't be muted until they enter your PIN. So still waiting for you, Dave. Audio PIN was sent. It's usually pretty simple. You want to log out and come back in? I don't know if that's going to help. Okay. Try this one. Now he's gone. Let's do that. So guys, while we're waiting for Dave, Guppy's come off a little bit. I think we're going to have to reschedule this. We'll give Dave another few minutes. Steve, are you around? Okay. We're going to have to reschedule David Cullum, it looks like. So it's going to be an abbreviated session, everybody. I want to thank everyone for showing up here today. Consider ForexAnalytix for your intelligence gathering. Apologize for the technical mix-up with David Cullum.
Hear me now?
I can hear you now.
Okay, I couldn't figure out how to unmute the part.
Okay, buddy. So I'm glad I'm right when I was giving up. See, you're more persistent than me. So Dave, it's been a long time since you and I have talked. We have a lot to catch up on. How have you been?
I'm good, and you?
Doing fine. So I just want to tell our community a little bit about you, that your background is as a professor and a chemist, and you teach at Cornell, but you also went rogue. And would you consider the markets an avocation for you, Dave, or would you consider equate it to what your career is as a teacher and a chemist? What would you say?
It's clearly a hobby for me, and since I'm relatively bearish at this point, it's not even an active hobby for me. I'm patiently waiting for something to happen that's not yet here.
Okay. Well, being a chemist, let me ask you, looking into 2018, since you and I have talked, there have been quite a few changes. The Fed has started to raise interest rates. Old school is 3 hikes and a stumble. This time it was 3 hikes and a trampoline. And we've had an election, and we have a new Fed chairman. So what elements are you looking at right now that might be combustible that you're looking for going into next year?
Well, I don't use market indicators per se. I pay most attention to valuations. So as far as I'm concerned, little maxim, overvaluation is appreciation pulled forward, undervaluation is deferred appreciation. Some will recognize that as a pirate of a thought about savings. If you're slightly overvalued, it's some ways you got to give that back, but it's a trivial thing, and it'll come back as a little frictional cost. Once you get way overvalued, then you're going to give it back also, but it's going to be a painful return. And right now, I think there's about 7 to 10 key indicators that say we're about 50%. We're about 2x overvalued. We're looking at a 50% correction to regress to the mean, and heaven only knows if we go ripping through the mean. So under those conditions, I have no interest in being exposed to this market. That's like buying a Toyota for $100,000. It's not a good idea.
Okay, well, yeah, it has been a good idea. So have you been lonely?
Yeah, very lonely. I've had to energy. I've done okay through the years. I mean, since 2000, I've compounded about 7%. So I'm not blubbering my beer, but the last 5 years have been a pain in the ass.
Okay, so does the dollar fit into your equation as far as overvaluation and central planning? And what's your best guess for when the stock market starts a correction, and if it turns into being a major one, is there going to be a flight into the dollar or out of the dollar? What's your guess?
I could imagine a flight into it first. I'm just an amateur. I could imagine a flight into the dollar first as people panic. At some point, I think the dollar itself weakens and the flight could go to, gold, Bitcoin. Who knows, right? I'm betting on gold, not Bitcoin. The thing that I'm watching the most right now is the junk bond market, in the sense that
HYG.
A variety of them, but I can't even remember the symbol for the European, corporate junk bonds are returning less than U.S. 10-year treasuries, and so that is a tulip mania to me, and
so maybe that's the big short rather than equities. A lot of people feel the debt markets are really going to be the pin that pops the equity bubble, and that is a first domino to fall. Are you in that camp?
If I don't short because I've got sucker written on my forehead. I've actually successfully shorted the market in the past in this sort of 3 to 5 year hedging mode. I shorted from 99 to 2002. I shorted from about 05 to 09 to cancel another trade, go market neutral. But to me, I'm just the fool if I try to do it. I don't have the skill. So I just go to the sidelines. When it's overvalued, it's like a card counter in poker. I size my bets accordingly. And but if I were a shorter, I'd short the hell out of the junk bond market. I'd probably go at some point, be ready to go long volatility because someone's going to get rich there.
Oh yeah, that's been people have been minting money selling any of the derivative VIX products for quite some time now. So go ahead. I mean, it is a huge base. I mean, I'll pull the VIX up here, Dave, so you could see it. And here, yeah. I think we're looking at the daily, and it's certainly trying. Looks like if we get over 15, something's happening. Then 17. I have speed lines all the way up here at 40 and then higher. So I agree with you. And there is an expression. Look how long this base is. See, I think that's a weekly. So the longer the base, once it breaks out, and the longer the launch into space. So I agree with you on VIX. It's just very difficult to find a VIX product that doesn't have as much erosion as buying puts or calls. Have you found one? Have you found one that is not doesn't penalize you for holding them? Because I know the UVIXI and TVIX, they just keep eroding in value even with the VIX moving sideways.
The erosion issue to me is so huge that's why I would never try to find one. Again, your listeners are so skilled compared to me, so I use the activity of your listeners to tell me what's happening, but not to act upon it. And so I don't even know if this is even possibly true, but someone posted a pair of 3x levered gold equity longs and shorts, two 3x levered funds, in which they both were down over 90%, while the GDX hadn't moved. And when there's products like that on the market, I stay away. Right? I don't want to be part of that market. And so
okay, well, I'm going to go to something that I'm more of an amateur on than you are. Right. And I've heard about this a few different times, and it's in your writings here. It was written quite some time ago, but it's Dave on the Fourth Turning in 2011. So 6 years have passed. Perhaps you could tell us what the Fourth Turning is and if it's beginning or hasn't even started yet. Yeah.
So I read the Fourth Turning pretty much the year before that. So 2010 during 11. It's a sociology book basically by Strauss and Howe, and they basically talk about human cycle theory, and it's fairly compelling in broad brushstroke terms. They try to force it a little too much, but basically, and human cycle theory has been around since the Roman times, and it basically says there's this long wavelength cycle that's the length of a lifetime, not a surprise, and that within it there are 4 cycles, and there are various societal moods, and the fourth turning is the one where all hell breaks loose. And they say about every 80 years you get a fourth turning, and the last one was Great Depression, World War II. The one before that was Civil War. Before that was Revolutionary War.
So kind of similar to Kondratia?
Yes, that's an analogy that's very good. Yeah.
Okay. All right. So obviously, when you look at asset prices, all hell hasn't broken loose, but you look at what's happening geopolitically, and there are plenty of pots that are simmering on the stove right now, bubbling over. So what comes first? Normally in these cycles, it's an economic downturn first before there's any kind of military action. And I look at what's happening now with either Iran or North Korea, and what's happening with Mueller's investigation. Do you think it's possible, if the heat is really turned up on the president, that as a major diversion, no one's going to want to impeach a president if we're in the middle of a war? What do you think?
Well, I don't know about the details, but one of the theories of the fourth turning is that it's not that bad things happen, but it's how society responds to them. So the fourth turning is essentially a 20-year round number window where society kind of goes crazy, and finally really sort of revolutionizes the status quo. And at the end of a fourth turning, there's huge change. It's kind of a new spring. And so you look at society's response to things, and what you see across the country, and this is absolutely true. So I would say the trigger could have been the 2009 crisis, because everything seemed okay. I would say it got cemented in by the fact that the authorities decided to punish nobody. And so society got mad. Everybody got mad. So now
the country's very angry and polarized.
Everywhere, across campuses, on Main Street, everywhere. And then Hillary getting beat and sent half the country into apoplectic frenzy. And so the Trumpers are now energized, and the progressives are the most hateful group of characters I've ever seen. I mean, I've never heard so much racism and bigotry as coming out of the progressive left this year.
Okay. So when you look at what's happening with the change at the Fed, which isn't much of a change, any view there? Paul is kind of like I believe, the first non-economist to head the Fed. Any thoughts on that?
Yeah, I think they're probably.
I think he's a lawyer by trade, isn't he?
I think no matter who you pick, they're shuffling the chairs on the Titanic, to use a trite phrase. I think the Fed must have some sense of what's coming their way. I think a number of them left because they don't want to be on call when it happens. And my guess is the Fed is looking at things like this massive pension stress. And it's, the problem with the pension stress is there is no remediation. So once society is way out of whack on something so large as pensions, the corrective measure is necessarily going to hurt. I write a lot about the how underfunded pensions are and how overpromised they are, well, there are a lot of cutbacks on pensions already, Teamsters. A lot of people aren't getting the pensions that they were promised, and the pension, what is it, the guarantee fund for pensions, just as like a drop in an ocean if there is a problem. So what are they going to do? Pensions would just go away for people? That would make people a bit angrier. I don't know. So I think, for example, I've actually written a draft on this for this year. I think the federal employees have backstopping them the power of the printing press, which means we're all going to pay. State employees, there's a chance that they'll come up with some legislation to make America great again in some way and backstop them. There's a thesis out there that there's legislation moving through the system in which they're going to let pensions borrow from the Treasury to backstop them, and that's a tacit bailout because you're never going to get paid back.
Right.
And so kind of a veiled bailout, and then at some point, you know, you've got this growing debt. It's doubled since 09, I think it is, and the sovereign debt, and any function to the nth power ends bigger than one eventually blows up. You know, there's this trite phrase that the greatest invention is the miracles of compounding. Things don't compound like that. That's one of the biggest frauds in history. If you actually look at compounded wealth since the time of Christ, it's compounded at about 1/4%. You don't compound exponentially like that because then you swallow the known universe. And so as our sovereign debts go further and further out of control, I think currencies are going to blow up. They're just going to get devastated at some point. And I don't know when. It could be in 30 years, but it is coming.
That's the art of it, isn't it, Dave? So the art is always the when. So you know, looking into the future is always a difficult task. None of us are Nostradamus, but I'm assuming that not much has changed, that you're still a big believer in gold, which brings me to what your thoughts are on the cryptocurrency mania.
Oh, yeah, I've written a chunk on that too. I've got a bunch of rough drafts of chapters for this year's Year in Review. I'm sympathetic to the crypto guys. I understand why anyone wants to escape the system. Right. I think that it's got all the hallmarks of a tulip mania, but I'm not willing to chime in and say it's guaranteed to be a tulip mania. There's bad symptoms. If you see a semi-log plot of Bitcoin, it's wildly upwardly curving, and so that's got tulips on it. Something like 4% by capita of the cryptocurrency owners own something like 95% of all the crypto. So it's this very lopsided ownership. So this is not a currency of the people. And so there's things about that just smell wrong. And they talk about how secure it is. Then there'll be some digital hack and wipe some wallet out or something. So there's all sorts of things wrong. I have friends, common friends with you, maybe Michael Krieger, you probably interviewed him, if not you should, who's up something like 100,000% because he got in early. You don't even have to size your bet right when you're up 100,000%. You can bet lunch money, Rich.
I think the owner of Interactive Brokers was on CNBC with some type of warning that once we have futures contracts, that unless people own the Bitcoins, that to allow them to be short could actually have a systemic risk for the whole financial system.
Well, so let's say one thing I think is undeniable is that the sovereigns, the central banks, the banks themselves, they hate Bitcoin, right? Bitcoin represents everything that they don't want to happen. You will occasionally
vis-a-vis Jamie Dimon.
Yeah, Jamie Dimon spouting off. By the way, while he was spouting off about Bitcoin, nobody noticed, but he slipped an earnings warning into that spew, and it never even got reported.
They're also trading it at J.P. Morgan.
I know, the whole thing.
And he said he would fire anyone that traded it, but probably they're one of their best profit centers now.
But here's the
go ahead.
problem. So let's say the sovereigns hate it. There's no chance they don't hate it. You will occasionally hear someone say, oh, it's an intriguing idea, blah, blah, blah. But it's like your parents, you say, hey, I want to buy a Ferrari, and they go start saving, right? They're not endorsing the idea. And so what'll happen, in my opinion, is at some point, it will become an issue. Now, Bitcoin will never be a currency until it settles down. So if you wake up in the morning and your groceries cost 20% different than when you go to bed, you're not going to use it as
that could happen just going from the milk aisle to the butcher.
Exactly.
So let me ask you this: Christine Lagarde, would you consider her part of the establishment? She said it's the new wave.
Yeah, she's the core.
Get used to it.
Yeah. So here's the deal. If I were a central banker and I wanted Bitcoin to stay off of currency status, I would just make it volatile. And Then, if that wasn't working, I would simply get the sovereign states to say Bitcoin is now against the law. And Bitcoiners will say, and again, I'm sympathetic to them. They will say, well, that's the beauty of Bitcoin is they don't control it. And I go, yeah, but 99% of the people will say, screw it, I'm out of here now.
Like China did?
Well,
Only globally?
China's been flirting back and forth with Bitcoin. But yes, at some point they'll declare Bitcoin the currency of drug runners and hooligans worldwide, and therefore it is against the law to trade it. And 99% of the population will say, I'm not going to fight the state. Let's go back and use digital dollars and digital euros and digital yuan.
Okay,
right?
so you know, that brings me to what were your thoughts when Modi overnight banned certain types of denominations in India and really caused a panic, since it was really a cash and carry economy. Do you think that being the largest democracy on the planet, that it was an experiment for what other governments might be considering to go cashless, and maybe that's why they're letting this cryptocurrency experiment go on, so that the public gets used to it and embraces it?
You know, the Modi move was so inexplicable that I kind of figure maybe other bankers around the world put a gun to his head and said, you're going to take this one for the team. You're going to do this. It's going to hurt. Get over it. And so for Modi to announce that on Monday morning, the higher denominations in a country that's 90% cash based no longer are usable. It's like if Trump got on TV.
Yeah, it's turning, your hundreds are no good anymore.
No, as of Monday morning, you can't use fossil fuel cars. So what happened? The entire Indian economy shut down instantly, which was predictable. Now you've got a black market in rupees, because it's the only paper currency not being produced in excess now. So it's actually kind of like Bitcoin, because it's now restricted. People use other stuff, but you know, trucks pulled over the side of the road, they couldn't buy gas, nothing, everything stopped cold. And so it's a great illustration of how not to do it, but it might have been a symbolic shot across the bow to someone, I don't know.
Yeah, kind of a test case.
A test case, but also it had more warning to it to me. It seemed too ham-fisted to be a beta test.
Okay.
It was much more mean-spirited. So I get the feeling there must have been a subplot that we're missing.
Okay. Dave, it's always great to talk to you. I'm so glad that you hung in there and we got the audio going, and it was great catching up with you and hearing your ideas. You're not an amateur. You're an excellent thinker, and that's why I invited you on. And I wish you and yours a great holiday season, and be safe for the fourth turning, my friend.
Yes, sir.
All right, thank you so much, Dave Cullum. And for people to follow you on Twitter, it's your name, right? At David, what's the initial?
At David B. Cullum.
Okay. I recommend you follow Dave on Twitter, because if you liked what he had to say, you have any articles coming up for, who do you write for, Zero Hedge? Any articles coming up?
I do a bunch of podcasts and some interviews and stuff like that. And it's been busy this year, but I write for Peak Prosperity. I write an annual year in review that's really way too big, but it's unique in that. And then it goes from there.
Yeah, I've seen the comments on Twitter. A lot of compliments for your writings, Dave. So keep up the great work to keep people informed and thinking, so we're not all lemmings and sheep when the time comes not to be. So great talking to you, my trading warrior brother.
Yeah, thank you.
Happy holidays. So that's a wrap for us. Thank you, everybody. We'll have our TGIF session tomorrow. Norm Winsky will be with us. And remember, don't just count your pips, count your blessings. Thank you, everybody, for your support of what we're trying to do here. Our mission is to build up and edify traders every day. It's the team's hope that we're accomplishing that. So enjoy the rest of your day, and see everyone to wrap up the week tomorrow. Adios.